Hey, what's going on, guys? Bot Mentality here, and today I am going to go ahead and start a trade series I'm going to be doing here on some of my options trades. So what I'm going to be looking for now is to open up an option trade here, preferably a vertical spread, and I'm thinking a call spread here on the SPY or the SPX. The SPX, as you know, is just essentially 10x the SPY. They're pretty much the same thing, but if you trade on the SPX, you can use fewer contracts and pay less commissions. But my thought process here is that I want to use tomorrow's expiration, and my bet is that the SPY will not be above a certain price by expiration, which would be tomorrow. So we're looking at just about a 48-hour trade here. This is my Twitter here, and we talked about, the news we had here regarding the trade wars and tariffs. We had Trump announcing that he's going to move forward with his $200 billion in tariffs. We saw the market gap down yesterday. I'll show you guys that here on the charts real quick. If you look right here on the SPY, I'll go down here to go to the 5-day. You can see that we did gap down yesterday here into this area. We saw a close right around here at $289.35. A gap down as Trump announced he's going to go ahead and proceed with that, and that China was going to retaliate. And then we saw a gap up this morning here on news that, as you can see right here, Apple essentially announced that their Apple Watch is going to be spared from the most latest tariffs. So as you know, the tech sector helps move the SPY. So what we saw here was that exactly happened because Apple gapped up, which if you checked Apple's prices here, let me jump over to that. If you check Apple's prices, Apple gapped up as well. You can see right here we have the after hours pre-market. We saw a gap up that helped move the SPY, and so the SPY gapped up as well. And so now we saw a high put in there at the $290.57 area. Actually, that is the high, $290.57, and now we're pulling back a little bit here, so it's going to increase the put premiums a little bit. So what I'm looking to do is actually sell a call vertical spread because we have the all-time highs here at $291.50, and we would need to curl and break through that and close above $292 by tomorrow in order to reach that. And with this tariff news, I don't think that we will. So we have, of course, I want the statistics on my side, and I'll go into that in a little bit. So we had that news there, and then we had China also announce new tariffs on the U.S. So they said they're going to do $60 billion, which we announced $200 billion. The $60 billion is nothing. I think they should come and hit us with a little bit more, and I do think they will because this is going to be effective Monday, I believe the 24th is. Let me double check that real quick. Yeah, this upcoming Monday is when these tariffs on the U.S. goods from China are going to be effective. So I'm going to go ahead and jump over here to the chart and just show you the technical analysis behind the trade. If you go to the 180-day, you see we set a previous high back here around that $287 level. We broke above that here to set all new time highs, pulled back, and found support on that $287 level, and now we pushed up, formed a lower high, now a higher low. So what we have essentially setting up here is an equilibrium pattern where we have the high of the range set, higher low set, lower high, higher low, and essentially a lower high, and chances are we pull back and make a higher low here on the daily chart. We could go ahead and go for a break, but I think we'll make a higher low just based on how the sort of speculative, the sentiment of the market right now. People are kind of worried. We saw a good reaction here out of the gate, but it's going to take some more steam to head up and break those highs. So what I'm going to go ahead and do here is you see here on the 4-hour, I'm going to drop it to the 20-day. Okay, you can see a little bit more clearly where we're at right now. In order for us to hit my call spread, we would need to break the all-time highs by the end of day tomorrow. So I'm looking to go ahead and open that up, and just from reviewing the options chain here, what I see is that for September 19th, we have I'm looking for on the SPX, of course, we have the $2,920 calls going for a 92% success rate right now, or 92 probability of success, with the 7% being in favor of those who are buying those out of the money calls. So it looks like that's what I'm going to go ahead and open that up. And of course, my target return is going to be between 2.5 and 4%. And I'll let you know the exact percentage once I lock in that bid-ask spread, as it is moving right now. So give me a few moments here. I'm going to go on the options trade and see if I can go ahead and place that call spread, and I will be right back with you. Hey, what's going on, guys? I am back and just wanted to update you on my trade. So I did go ahead and place that options trade. I was looking at doing just a call spread. However, after looking at this previous low here, and I'll go ahead and back it out for you and show you, I was doing some more technical analysis and I saw this previous low here at the 287. Then we had the 286, right? Which is a hard $1.5 mark, which I'm focused on. If this truly is an equilibrium pattern and we make a lower high here, then chances are we'd make a higher low above that previous low 288. So I went ahead and decided to open an iron condor and and go ahead and open up a bottom leg as well. And so what that means is I sold a call spread above and a put spread below the current price. So what I ended up doing here, and I'll break it down for you on another chart here in a second. I'll show you my order confirmation. Give me just a second. I'll bring this over here for you guys. Hopefully you'll be able to see this. Okay, so here's my order confirmation for you to see. So I went ahead and opened up an iron condor. I did it on the SPX. You know, I sold the call spread above the price. I sold the 29.25 and bought the 29.35. So the spread between that is $1. Or $10, and then I sold the put vertical spread, sold the 28.55, and I bought the 28.45, and I'll show you exactly what that looks like here on the chart, so you can kind of visualize it. All right, so here you go, guys. I went ahead and drew this out for you to help you visualize it. So on the top of the screen here, we have my call spread. Okay. So this is my call spread on the very top of the screen. And then below that, we have my put spread. All right. And so essentially what these lines mean is this, I'll go ahead and change this. This lower blue line I just made blue, that is the short leg. So the sold calls, sold calls there at 29.25. And then this bottom leg on the bottom that I will put in red, that is my short on the put spread, the ones I sold in the put. So essentially, as long as we stay below that blue line and above this red line, I will remain in profit. We need to expire between there by tomorrow. So about today's trading day and tomorrow's trading day are all I have to worry about there. And when I sold these, and I'll bring this picture over here, this might be a little complicated, but I'll show it to you. And hopefully it'll help make sense. So this right here is think of it as the level 2 for options. Essentially in the order book, this is going to display all the options prices that are available, the volume that's traded at those prices, their expiration dates, and also their, the Greeks and the gamma delta, and it'll show the probability of success based on how fast the stock is moving and what the market sentiment is and where the order flow is essentially going. So if you look on here, you'll see my position in the top right corner there. That's the put side. Okay, it's going to be really bad here as far as the drawings, and then this is the call side, and you'll see my position right here. That's already been placed, and you'll see at the time I took this screenshot, the probability for there on the put side, the probability of expiring out of the money. So essentially of me winning, 92%, and then the probability here on the put side of my short put leg hitting is 94%. That was a pretty bad circle there, but you see that right there. So that's the probability of success was 92 and 94. Now this always adjusts and it always changes based on news, based on volume, based on the momentum of the options prices changing, based on the underlying SPX changing. All of this is going to change and adjust. You need to keep that in mind and always keep an eye on it. But when I sold it, this was right about where it was. Okay, so I wanted to go ahead and show that to you. I will update you guys tomorrow as far as the position, how I've been managing it, and if anything changes here at the end of the day. So I will see you guys here in a couple hours and update you on my trade. Oh, real quick before I get out of here, I also wanted to go ahead and show you the breakdown of what it took to open this position. So I spent about $2,900 to open up this iron condor, and I did open up 3 contracts. The total premium collected from those 3 contracts was $120, and so the percent return there was 4.1% return, which I collected up front. The expiration date is tomorrow, which is September 19th. So right off the bat, you collect your premium, and now we're going to go ahead and wait and see how this works. I do have the opportunity to close the contracts early if necessary, or if I need to take off my call or put leg in order to help mitigate risk. So that's what you need to be careful of here, is the fact that if the price moves very quickly or news happens, you could be put towards that max loss. Now my max risk is the cost of the position. that's the max amount I can lose, is 100% of what I invested. So you have to make sure you're very careful and keep an eye on the news and keep an eye on the market sentiment. So I'll be watching this all day, and I'll update you guys today at the end of the day with how the market closes. Hey, what's going on, guys? I am back, and the market just closed. It is currently 4:27, September 18th of 2018. And let's go ahead and recap the day. So as you can see here today, the SPY was bought up all day, all the way up to this high here of $291.46, and then we ended up pulling back, consolidating above VWAP before we curled back and broke to a new recent high there of $291.58. However, we weren't able to quite break the all-time highs, which, as you can see, we came very close. The all-time high being $291.74. Today we were only able to get to the $291.58. We were only a couple cents off. However, we came very close to that, which is very bullish. Today was a really great day for the SPY and the Dow. The Dow closed up almost 200 points. The SPY made a very great close above its previous lows as well. So right now, we sold off there from the close, which definitely really helped my iron condor that expires tomorrow. And right now we're curling up after hours. So where that puts me at, I'll kind of break this down as to why I'm looking at the SPY. So if let me drag this over here for you guys. So essentially, as I explained earlier in the video, the SPX is essentially just 10 times the SPY. That's how you need to look at it. My short put of my call spread, or the short side of my call spread, is 29.25. So I need the price to close below that tomorrow. And on the SPY, that correlates with $292.50. So essentially the same thing, just 10x, right? So on the SPY, it makes it a lot easier to see just because it's a smaller number. On the SPY, we have the resistance of 291.58, this previous pivot high here of 291.46, and of course on the 20-day, if we look at the all-time high, 291.74. Those three highs stand in between my 292.50 or 29.25 on the SPX, which is my essentially break-even point, right, of my call spread and the current price. So what I would like to see for tomorrow, because this is very bullish, this is a very bullish sign, especially if we were to zoom out here. You can see if we were to draw a line connecting the three pivot highs here, you see we're making higher lows on the bottom with the bears staying roughly in the same spot. It looks like the best case scenario for the bulls would be either to gap up and break earlier in the morning in pre-market, or we'll pull back and form a higher low compared to the previous open down here at $289. We'll form a higher low likely above $290.50, and then curl up and break the highs. Now, I am sitting in a really good spot there at the 292.50. Or on the SPX 29.25, so I'm not too worried right now. As if you go and check here at the closing, I went ahead and screen cap this for you guys. Here at the closing, you can see that my short side, the put spread, is definitely far out of the money. There's a dang near 0% chance that's going to hit. Right now I'm at 98.22% probability of success for the put side of my iron condor, so I'm not worried about that. However, the long side is the one that needs to be focused on right now, as the SPY did close very bullish. But right now my short side of the call spread is at 92.79% probability of success. So what I'm worried about now, the worst that could happen, is that the SPY could gap up here on a larger time frame. We could see a gap up and an open there above the 291.58 on bullish news, and then a run up to my the short side of my call spread, which is the $292.50. However, that's unlikely to happen if we were to go to the 180-day time frame, and you just look at the indicators here on the bottom. We have the slow stochastics sitting up there at the 78, and then we have the RSI here sitting at 57. So we are more towards overbought than oversold. Let's see, let's look at the yearly here, and the yearly we're sitting at 62 there. We definitely could continue. I do think this is a very good sign for the bulls. Any break over the $292, and I'm going to look to exit the short side of my call spread. However, it doesn't look likely right now. The best case scenario for me is if we are to sell off through the close, sell off and break the lows, and open up around the $290.50 level. At that point, I'd be at a pretty much 100% chance of success. So the worst case scenario for me is a gap up. Best case scenario is a gap down, basically, guys. So I will update you guys tomorrow on market open or pre-market, whenever it looks like we have enough data to go ahead and jump into it. And yeah, but so far things are looking pretty good for my expiration tomorrow on my iron condor. Hey guys, what's going on? Real quick, there's one aspect of this trade I forgot to mention in the previous clip. The one advantage that I do have playing on my side heading into tomorrow is the fact that because I sold the Iron Condor, I have theta, which is time. I have the time decay on my side. So because tomorrow is the options expiration date for this trade, as the time increases or the time moves closer towards 4 p.m. tomorrow, which is when the stock market will close, my time decay should accelerate. So the price of my option should quickly decrease the closer we get to the expiration. So what that means is as long as we're below $292.50 on the SPY and $29.25 on the SPX, I'll win. But also halfway through the day, we should see the price of the call, of really the call spread and the put spread, so both legs of the Iron Condor, decrease very quickly as the day winds to a close. So there is the opportunity for me to close my trade early for anywhere between 70 to 90% of the profits I would receive in the end. I don't have to hold this out of the money, I wouldn't have to hold this Iron Condor until close to collect the full profits when I could close it early to collect the majority of the profits. So hopefully we don't gap up. Hopefully we'll open flat or gap down, which would be the best case scenario since we're closest to my call leg of my Iron Condor, which is the biggest risk right now. But we have a 92% probability of success on my side, so I'm not too worried about it. I just want to go ahead and get that into you guys so you know kind of what my mindset is heading into tomorrow, and I'll check back with you guys here in the morning. All right, deuces. Hey, what's going on, guys? Bot Mentality here, and I am back in the morning, and the market has opened. It is 10:35 a.m. on September 19th, so the market's been open for about an hour now. And let's just go ahead and recap the trade here real quick. So the very first thing, remember, it cost me $2,900 to open this trade. I collected $120 in premium. The percent return there is 4.14%, and the expiration date is today, which is September 19th. And here's the two prices. I usually just chart the SPY because it's easier, like the way it trades better, but they're the same thing. The SPX is just 10x the SPY. But this is my break-even prices to the my call spread. And the reason why I have it in this format is, and not the put spread, is because we're so far away from the put spread. It's pretty much guaranteed to expire out of the money. The only concern I have right now is on the call portion. Call spread portion of this Iron Condor. So how's the position been going? So as you can see here, if I jump over here to the, I'll stay on the 1 day, 1 minute. I talked about yesterday's action where we put in a couple tops here around that $291.50 level. And as you can see here in pre-market, we did curl up nice and strong there after hours, but we saw a sell-off in the morning, quick reclaim to a parabolic at the open, pull back, and then essentially a double top there around that same $291.50 level. That's the level I said yesterday that would be the focus resistance, because we did have essentially a triple top on that level. If you jump back here, you can see it right here. We topped out pre-market at that level as well, and then we did over here yesterday. So on the 1 day, 1 minute, so far we've had two tops, pull back, and now we're fighting to reclaim VWAP. So we do have a lot of time left in the day as far as if it'll feel able to reclaim VWAP and curl to form a new all-time high over $291.75 or $291.74, which is the current all-time high on the SPY. But currently we're trending under VWAP. And remember, today is expiration, so every second that passes, the value of my call spread is going down, which is good for me because that means that if I would like to buy it back and collect partial profits, which would be the majority of the profits, because we're pretty far away from my strike price, I can do that if I ever do feel nervous, or I can go ahead and hold it till the end of the day, till 4 o'clock, to see if it'll expire worthless, which is of course the maximum profit scenario for me. In that situation, I would collect the entire $120 premium that we just talked about. Oops, that's the wrong one, but I'll go ahead and jump into it here. I meant to drag over this one here, guys, that $120 we talked about. But this right here is just a screenshot I took this morning, just about 15-20 minutes ago, to show you the probabilities here of that 19th expiration, how they've changed and modified here this morning. So you'll see that yesterday when I checked, I was at about 92% if I remember correctly on my call spread. Currently we're at 96.7% chance of expiring completely out of the money, which is the maximum profit scenario for me. And then over here on the put spread side, we're at 99%. Well, you can't really see it too bad. There you go. So you can line it up there. We're at 99.59% on the put side. And that's all I look at is the short puts, because that's essentially my risk right there. The short puts, the short side of the call spread and the short side of the put spread. So right now, all my only focus is on the call spread. I'm just watching that right now as we sit here in the SPYs fighting for VWAP. Looks like we're getting close to maybe curling up and trying to head back to the high. So it's just something you got to keep in mind. Always make sure you control your risk, because you don't ever want to take a maximum loss on a vertical spread. And so that's pretty much the update, guys. I will check back with you if something interesting happens, or I decide to take it off early. It'll likely be towards the end of the day, as I want to sit here and see if we can manage to hold VWAP or not. But that's it, guys. So far, so good. It's looking absolutely fantastic. And give me just a second. I will calculate my percent return if I were to take it off the table right now. All right, guys, I am back. I just went ahead and calculated that for you. So yeah, if I were to go ahead and I'm at a currently $103 unrealized gain compared to the $103 compared to the $120, which is what I'm selling for if it expired worthless. So it's $103.50 is my current profit here on the short side of my call spread. If I were to go ahead and just divide that by my total investment, you're looking at a 3.56% return if I were to go ahead and take the trade off now. I will say you never know what happens at the end of the day, so what usually happens is the majority of options traders will go ahead and take it off early. I'm going to sit here and watch it for just a little bit and just keep a close eye on it, but if there is a chance, I may go ahead and just take it off a little bit early just to go ahead and collect that 3.5%, because you really can't complain on a return investment in a day. I sold this yesterday. So all right, guys, I will check back with you if I decide to do that, and I'm going to just go ahead and just watch the market. Hey, what's going on, guys? Bot Mentality here, and it is time to bring this trade recap to a close, and it is currently September 19th at 5:09 p.m., so the market's been closed for about an hour now, and as you can see, I was correct, and I had plenty of room to spare. Definitely have some nice lessons here from this one, but I went ahead and collected. It turned out being 3.8%, and I'll explain why. So here throughout the day, we had some volatility in the morning, poking up to that 291.50 level, but we lost volatility throughout the middle of the day, consolidated around VWAP, ended up closing at 291.25. And we did not set a new all-time high, even though right here during right around 11 o'clock, we went for that. We went for the all-time high at 291.74, but we did not hit it. So I'll jump over here to the SPX, which is what my iron Condor was actually on, and you'll see the charts exactly the same. However, the numbers are a little bit different because remember, it is roughly about 10x to SPY, but we closed there at 2908.13 here at the close, and we weren't anywhere near the 29.25, which is where my the short portion of my call spread was, which was my essential break-even price. So I nailed it, guys. I pretty much nailed it, and the only reason why I say pretty much nailed it, and I'll show you why. It's easier to look here on the SPY. So the reason why I did not completely nail this is because as I saw the trade action, let me show you exactly what I saw. I was right in here, and so what it was before that. It was right about here. What I saw here was we made two attempts here to break the 291.50, pulled back below VWAP, consolidated on it, pushed up, pulled back, formed a lower high based off the previous high. When I saw this bottom here and we reclaimed VWAP and we're heading up towards highs, I knew I was not wanting to sit through this much longer because we still had a lot of time throughout the end of the day, and I figured we'd consolidate there around VWAP and then curl to head for a new high because we'd had very bullish momentum here with the rescue pre-market and the parabolic at the opening. So what I did is once I saw us pull back here back towards VWAP, at that time the theta, which is the time decay, was heavily in my favor, and I was able to go ahead and buy back the short side of my call spread for much cheaper than I sold it for. So it did cut into my profits a little bit, but I completely eliminated risk. The reason why I didn't do that on the put side was because my puts, were at 99% chance, 99% probability of expiring completely at max profit or out of the money. And even my my 29.25 the short portion of my call spread, the one that I took off here because I was a little uncomfortable with us trading so close to it. Even that one had a 96% probability of expiring out of the money when I took it off, which if it expires out of the money, that's max profit for me. So I didn't mind though, and here's why. So here's the numbers, guys. I'll bring those over here. So you see where the SPY closed, you see where the SPX closed. I took the short leg off my call earlier there and pocketed $111. And as you know, in the beginning, I sold it for 100 or 120, and so when I bought it back a lot cheaper, and the spread, the premium that I ended up collecting was less because I didn't let it expire worthless. I had to buy it back for a very cheap price, so I cut into my profits a little bit. So instead of making 4.14%, I only made 3.8%, which really is not bad at all, guys. It is not bad at all. And so just to go ahead and run the numbers here for you, I collected at 3.8%, and remember, I sold this on the 18th. So this was only a 1-2 day, technically 2 trading days duration for this this Iron Condor. And so I sold that, collected 3.8% in just 2 days. So that's a return of 3.8% a week. If you do this once per week, that's 15.2% in a month, and that's 182.4% a year with my strategy, guys. So that's exactly how this turned out. And with this trade, I took it off early. I could have let it expire completely worthless and pocket the 4.14%, but just wanted to play it safe. You never know what can happen there at the end of the day. So super excited. I'm excited to go ahead and sell another one of these tomorrow and see what I can pull in. I do have 2 other Iron Condors. Actually, I have 1 other Iron Condor on right now, along with a call vertical spread. So those 2, they're definitely a lot more than this, but this is a great example trade. I wanted to show you guys what's possible here with my strategy selling options. So that's it, guys. I am going to head and get out of here. I'll bring you guys more of these trade recaps. I have multiple trades going on every week, but this is just the first one. So I hope you enjoyed the content. If you have any questions, just leave a comment there in the comment section below. You can shoot me an email. You can tweet me on Twitter. I'll get back with you same day. Message me on Discord, whatever you guys want to do. If you're interested in joining my chat room there, I have a Discord, which is listed on my Patreon, and also a mentorship program and a newsletter program where I will chart out these charts for you daily. So that's it, guys. I'm going to go ahead and get out of here. Continue to stay focused and develop that bot mentality, which is the trading mentality where you learn to control your emotions to trade like a machine. Deuces.